On August 15, 1971, President Richard Nixon walked into the Oval Office and killed sound money forever. He didn't fire a gun. He didn't pass a law through Congress. He simply stood in front of cameras and announced that the United States would no longer exchange dollars for gold. That single decision, made in secret over a weekend at Camp David, created the world you're trapped in today. 54 years later, you are living inside the prison that was built that night. It's a prison with 3 walls. 3 systems so perfectly interlocked that escape seems impossible. The banking system controls where you put your money. The debt system controls what you can afford. The currency system controls what your money is worth. Together, they form the most sophisticated wealth extraction machine ever designed. And here's the part that should terrify you. This wasn't an accident. This wasn't market forces naturally evolving. This was engineered, deliberately, by the people who profit most from your inability to escape. What I'm about to show you isn't conspiracy theory. It's conspiracy fact. It's documented in Federal Reserve papers, IMF reports, and central bank speeches that nobody reads. The cage is real. The locks are real. And the system is designed to keep you inside until the day you die. But there are cracks in the walls. There are ways out. And by the end of this investigation, you're going to understand exactly how these 3 systems work, why they were built this way, and what you can do to break free before it's too late. This is the story of your financial prison. And unlike most prisoners, you need to understand the architecture of your cage before you can escape it. The banking system where your money isn't really yours. Let me start by destroying an illusion that you've believed your entire life. When you deposit $10,000 into your bank account, you think the bank keeps your $10,000 in a vault somewhere with your name on it. You think your money is safe. You think it's yours. You're wrong on all counts. The moment your money enters the banking system, it ceases to be yours. Legally, you no longer own that $10,000. What you own is a promise from the bank to pay you $10,000 if you ask for it. You've become a creditor of the bank. An unsecured creditor. If the bank fails, you stand in line with all the other creditors hoping to get something back. But it gets worse. Your bank doesn't even keep your $10,000. They keep maybe $1,000 of it if you're lucky. This is called fractional reserve banking. The bank is allowed to lend out $9,000 of your deposit to someone else. And here's where it becomes truly diabolical. That $9,000 loan gets deposited into another bank, which keeps $900 and lends out $8,100. That bank's loan gets deposited elsewhere, creating another $7,290 in loans. Your original $10,000 deposit just became $34,390 of money in the system. The bank created $24,390 out of thin air. This is called money multiplication, and it's completely legal. Actually, it's worse than legal, it's required. The system depends on it. In fact, as of March 2020, the Federal Reserve eliminated reserve requirements entirely. That means banks in the United States are now operating on a zero reserve system. They don't have to keep any of your deposit. They can lend out 100% of it. Your $10,000 becomes infinite money, limited only by how many borrowers the bank can find. Now, you might be thinking, so what? The FDIC insures my deposits up to $250,000. I'm protected. And that's exactly what they want you to think. The FDIC has approximately $125 billion in its insurance fund. Total insured deposits in the United States exceed $10 trillion. That's 80 times more deposits than insurance. The FDIC can cover 1.25% of insured deposits. If just 2% of banks fail simultaneously, the insurance fund is wiped out. What happens then? The government steps in and prints money to bail out the depositors, which devalues every dollar in existence, including yours. So your deposit is safe in nominal terms, but the purchasing power has been destroyed. We saw this playbook in March 2023 when Silicon Valley Bank, Signature Bank, and First Republic all collapsed within a week. The government immediately guaranteed all deposits, even those above the $250,000 limit. They printed money to make depositors whole. Your dollars lost value to save someone else's deposits. This is the first wall of your prison. The banking system has transformed your money into debt-based credit, multiplied it into existence, and placed you at the mercy of institutions that operate on leverage ratios that would make a Las Vegas gambler blush. But the banking trap only works because of the second system, the one that ensures you can never save enough to escape. The debt system, the hamster wheel that never stops. Here's a number that should shock you. As of December 2025, global debt has reached $346 trillion. That's 310% of global GDP. Let me translate that into plain English. The entire world owes 3 times more money than it produces in a year. How is that even possible? How did humanity accumulate $346 trillion in debt? And more importantly, who do we owe it to? The answer is simple and horrifying. We owe it to the banking system that created it out of nothing. Remember how your $10,000 deposit became $34,390 through fractional reserve lending? Every dollar of that newly created money is someone's debt. The person who borrowed $9,000 from your bank owes it back with interest. The person who borrowed $8,100 owes it back with interest. All the way down the chain. But here's the mathematical trap that makes escape impossible. The system creates the principal but not the interest. Let's say the bank lends out $100 at 5% interest. The borrower now owes $105. But only $100 exists in the economy. Where does the extra $5 come from? It has to come from someone else's debt. The only way to pay interest on existing debt is to create more debt. This is why global debt grows exponentially. It's not because people are irresponsible. It's because the math demands it. The system literally cannot function without perpetual debt growth. The United States federal government debt is $35.9 trillion. Annual interest payments on that debt exceed $1.2 trillion, more than the entire defense budget. And that interest gets paid to bondholders, which includes foreign governments, pension funds, and wealthy individuals. Your tax dollars are being extracted to pay interest on money that was created out of nothing. But wait, you say, government debt doesn't affect me. I'm not borrowing from the federal government. Wrong. You're paying for it through inflation. When the government can't collect enough taxes to pay the interest, they print more money. That new money dilutes the value of every dollar you hold. Consumer debt in the United States is $18.59 trillion. That's mortgages, car loans, credit cards, student loans. The average American household carries $101,915 in debt. The average interest rate across all forms of consumer debt is approximately 8.7%. Do the math. The average household is paying $8,867 per year just in interest payments. Not principal. Just interest. That's $8,867 of your labor being extracted by the financial system before you can buy food, pay rent, or save for the future. And here's the cruelest part of the debt system. It's designed to be inescapable. Mortgages are structured so that you pay mostly interest in the early years. A $300,000 mortgage at 7% interest costs you $418,527 over 30 years. You pay $118,527 in interest alone, 40% more than the original loan. The first 10 years of payments are 75% interest and only 25% principal. You're renting money from the bank for 3 decades. Credit cards are even worse. The average credit card interest rate in 2025 is 21.47%. If you carry a $5,000 balance and make minimum payments, it takes 15 years to pay off and costs $6,923 in interest. You paid $11,923 for $5,000 worth of purchases. The financial system extracted 138% of the original value. This is the second wall of your prison. The debt system ensures that even if you manage to accumulate wealth, the interest payments extract it back into the banking system. You work your entire life to pay interest on money that was created out of nothing. But the most insidious wall isn't banking or debt. It's the currency itself. The currency system, the silent thief you never see. On that August night in 1971, when Nixon severed the dollar's connection to gold, he didn't just change monetary policy. He changed the nature of money itself. For the first time in history, the world's reserve currency was backed by absolutely nothing. No gold, no silver, no commodities, just a promise. This is called fiat currency. Fiat is Latin for let it be done. The government declares that this paper is money, and therefore it is. The value is based entirely on confidence and legal mandate. You accept dollars because the government forces you to through legal tender laws and because you believe others will accept them from you. But here's what they don't tell you about fiat currency. It's designed to lose value. This isn't a bug. It's a feature. Central banks explicitly target 2% inflation per year. The Federal Reserve states this openly in their policy objectives. They want your money to lose 2% of its purchasing power every year. Let's run the math on what 2% inflation does over a lifetime. If you're 25 years old with $50,000 in savings and you live to 85, that's 60 years of 2% annual inflation. Your $50,000 will have the purchasing power of $15,184 by the time you're 85. You lost 70% of your wealth by simply holding dollars. But wait, the official inflation rate of 2% is a lie. The Consumer Price Index, CPI, has been systematically manipulated since the 1980s. They changed the calculation methodology to understate true inflation. If you calculate inflation using the 1980 methodology, the real rate is closer to 8% per year. At 8% inflation, your $50,000 becomes worth $497 in purchasing power over 60 years. You lost 99% of your wealth. This is the silent theft that nobody sees because it happens slowly year after year, decade after decade. Your bank statement shows $50,000. But that $50,000 buys less every year. The number stays the same. The value evaporates. And why does this happen? Because fiat currency is infinitely printable. When the government needs money, they don't raise taxes or cut spending. They just create new money. The Federal Reserve's balance sheet was $870 billion in 2007. By 2025, it's over $7.2 trillion. They created $6.3 trillion out of thin air in less than 20 years. Every dollar they create dilutes every dollar you hold. It's a hidden tax that you can't avoid. You can't vote against it. You can't opt out of it. As long as you hold dollars, you are being slowly drained. But here's where it gets even darker. The next evolution of the currency system is already being rolled out. It's called Central Bank Digital Currency, or CBDC. As of July 2025, 134 countries are actively researching, piloting, or launching CBDCs. A CBDC is not like Bitcoin or cryptocurrency that you control. It's digital money controlled entirely by the central bank. Every transaction you make is visible to the government. Every dollar you spend can be tracked, monitored, and controlled. Imagine this scenario. The government decides that luxury goods are contributing to climate change. They program the CBDC so that you can't spend more than $500 per month on non-essential items. You try to buy a new TV. Transaction declined. Not because you don't have the money, because the central bank decided you don't need a TV. Or imagine you donate to a political cause the government doesn't like. Your CBDC account is frozen. Your money still exists. You just can't access it. No trial. No due process. Just a line of code that shuts you off from the financial system. This isn't science fiction. China has already implemented this with their digital yuan. They've used it to prevent people from buying plane tickets or staying in hotels if they have low social credit scores. The infrastructure for total financial surveillance and control is being built right now. This is the third wall of your prison. The currency system itself is designed to extract wealth through inflation while moving toward total control through digitalization. How they keep you trapped. Now you understand the three systems. Banking transforms your money into debt-based credit you don't actually own. Debt extracts your labor through perpetual interest payments. Currency slowly destroys your wealth through inflation while moving toward total control. But how do they keep people from realizing this? How do they prevent mass awareness and rebellion? The answer is psychological engineering. They've created the illusion of choice and freedom while building invisible barriers to escape. They convince you that you need a bank account to function in society. Try living without one. Try getting a job, paying rent, or buying a car without a bank account. The system has been designed so that banking is mandatory, not optional. They normalize debt as a necessary part of life. Everyone has a mortgage. Everyone has a car payment. Everyone has student loans. Debt has become so ubiquitous that being debt-free makes you weird. They've socially engineered a culture where servitude to the banking system is considered normal adult behavior. They teach you to save in dollars. Financial advisors tell you to keep 3 to 6 months of expenses in a savings account. But savings accounts pay 0.5% interest while inflation runs at 8%. You're losing 7.5% per year by following expert advice. The advice is designed to keep you in the system. They demonize alternatives. Gold is called a barbarous relic. Bitcoin is called a speculative bubble. Real estate is called overpriced. Any asset that can't be printed or controlled by the central bank is attacked by mainstream financial media. Why? Because these assets allow you to escape the currency debasement trap. They use complexity as camouflage. Fractional reserve banking, quantitative easing, reverse repo operations. They bury the truth in jargon and complexity so that regular people can't understand what's being done to them. If you can't understand it, you can't fight it. But here's what they don't want you to know. The system has vulnerabilities. The walls of your prison have cracks. And those cracks are growing wider every day. The first crack is awareness. You're reading this right now. You understand the systems. Awareness is the first step to resistance. Share this knowledge. Talk about it. Break the illusion that this is all normal and inevitable. The second crack is asset allocation. You can't completely escape the banking system, but you can minimize your exposure. Keep only enough cash in banks to cover monthly expenses. Move everything else into hard assets that can't be printed. Gold, silver, real estate, productive businesses. These assets retain value when currency degrades. The third crack is debt elimination. Every dollar of interest you pay is a dollar extracted by the system. Aggressively pay down high-interest debt. Refuse to take on new debt unless it produces income that exceeds the interest cost. Break the debt cycle that keeps you trapped. The fourth crack is parallel systems. Cryptocurrencies, peer-to-peer lending, barter networks, community currencies. These are systems that operate outside traditional banking and currency. They're small now, but they're growing. Participate in them. Build them. Support them. The fifth crack is political pressure. Demand transparency in monetary policy. Oppose CBDCs. Support legislation that limits fractional reserve ratios and requires banks to hold actual reserves. The system relies on your complacency. Political awareness and action can force change. The sixth crack is time preference. The system wants you to live paycheck to paycheck, consuming now and worrying about the future later. Reverse this. Live below your means. Save aggressively. Build assets that compound over time. Break the consumption cycle that keeps you financially dependent. Let me be very clear about what I'm telling you. These three systems, banking, debt, and currency, were not designed for your benefit. They were designed to extract wealth from your labor and transfer it to those who control the creation of money. The numbers don't lie. Global debt of $346 trillion. Federal debt of $35.9 trillion. Consumer debt of $18.59 trillion. A currency that has lost 99% of its purchasing power since 1971. A banking system operating on zero reserves. The math is unsustainable. The system is breaking. You have a choice right now. You can continue to play by the rules of a rigged game, or you can start building your escape route. Step 1. Audit your financial position. How much debt do you have? What interest rates are you paying? How much cash do you have sitting in banks earning nothing? Write it all down. Understand your current position in the system. Step 2. Reduce your banking exposure. Keep only 1 to 2 months of expenses in checking. Move emergency funds into treasury bills or money market funds that pay actual interest. Stop letting banks use your money for free. Step 3. Attack high-interest debt immediately. Credit cards first. Personal loans second. Car loans third. Mortgages are lower priority because of lower interest rates, but make extra principal payments when possible. Every dollar of debt you eliminate is a dollar of freedom you gain. Step 4. Allocate to hard assets. Build a position in physical gold and silver, at least 10 to 20% of your investable assets. These can't be printed. They survive currency collapses. They've been money for 5,000 years. Step 5. Learn about alternatives. Study Bitcoin and cryptocurrency. Understand how they work. Don't invest what you can't afford to lose, but understand that these technologies were literally designed to escape the banking system. Step 6. Build income streams outside the system. Side businesses, rental properties, dividend-paying stocks. Any source of income that doesn't depend entirely on a single employer. Diversify your income sources like you diversify your assets. Step 7. Educate others. Share this information. Talk about it with family and friends. The system relies on mass ignorance. Every person who wakes up weakens the system's control. Step 8. Vote with your money. Use local banks instead of mega banks. Support businesses that accept cryptocurrency. Participate in local barter and trade networks. Every transaction outside the traditional system is an act of resistance. Step 9. Stay informed. Follow independent financial analysts. Read Federal Reserve statements. Track monetary policy. Knowledge is power. The system depends on you not paying attention. Step 10. Be patient but persistent. You didn't get into this system overnight. You won't get out overnight. But every action you take toward financial independence moves you one step closer to freedom. The prison walls are real, but they're not made of steel. They're made of ignorance, complacency, and acceptance. The moment you stop accepting the system as inevitable, you begin to see the exit doors. Nixon's decision in 1971 built the cage you're living in. But the keys to that cage are in your hands. Banking, debt, and currency, 3 systems designed to trap you. But now you know how they work. Now you know where the weaknesses are. Now you know what to do. The question is, will you do it? If this opened your eyes to the financial prison around you, don't keep it to yourself. Share this with someone who needs to understand how the system really works. Subscribe to stay ahead of the monetary changes coming in the next decade. Comment below and let me know. Are you taking action to escape these 3 systems? Or are you staying trapped? The system doesn't fear people who complain about it. The system fears people who understand it and act accordingly. Be the person who acts. Break free. Build wealth outside their control. The walls are high, but they're not impossible to climb. Start climbing today.